Hey, Chad Rankin here, Rankin Mortgage Team in Worcester, Massachusetts. We've been seeing a lot of issues lately with what is considered variable income. Consider somebody that works, at X dollar amount hourly. They work 40 hours a week, every single week, but it's technically not salary, right? And so what happens if, you took a day off here or there that wasn't covered by either vacation or sick leave? Or you just started a job and for the first 90 days, they are not paying holidays. We've seen a lot of funky stuff lately that Fannie Mae, Freddie Mac, the agencies, FHA, HUD, now have told us that we need to consider this to be variable income. So the new rules pertaining to what's considered variable income has thrown a wrench in a lot of people's scenario because they feel like their salary. But when we look at the numbers and we go backwards and we look at how many days we're in the year, how many weeks we're in the year at X dollar per hour, and you do the math backwards, which is what the agencies require that we do, and it looks like you have earned less than what you should have year to date, then we've got an issue and we have to consider it variable income. We've been on the phone with Freddie Mac, with Fannie Mae, with HUD directly on this many, many times. And so lenders are getting really strict on this. They don't have an option, because if we fund a loan, or any lender funds a loan, and it is deemed that it was not salary but rather variable income, then it's what's called a buyback. And so it can be pretty serious. Somebody that just recently started a job, for example, we actually have to look back up to 2 years and average their income even with another job. And so it is really something that you just need to make sure that you're in touch with somebody that knows this stuff inside and out. And while we will turn over every stone to try to figure a way to make something work, there are limitations to that. And the worst thing that could happen is you get a pre-approval and you go out and get under contract on a property, and then what happens? You end up, getting the rug pulled out from underneath you and losing the property and potentially losing money on appraisal and money on home inspection. And we don't want that to happen. So just something to keep an eye out for. Think about if you are not truly salary, what your hourly wage is, and try not to take time off that is unpaid if that is at all possible. Any questions, as always, just reach out. We're happy to answer them for you.